Welcome to The Subject Property. I'm Stephen Harrison, Joint Managing Director of Ray White Commercial, and I'm here once again with Vanessa Rader, our Head of Research.
Hi there.
Hi, thanks for being here.
Thank you.
Vanessa, look, we've had a number of conversations about this. Personally, I'm very bullish on office as an asset class and investment, particularly in Western Australia. Share your views.
Oh, I actually totally agree with you. It's one of those asset classes that everyone's been a bit freaked out about, and there's been such a limited amount of transactions that have occurred across the country, not just in WA, but WA in particular, very, very quiet. It's a very simple calculation really to look at. So we've come to the end of the supply cycle in terms of new supply coming into the Perth market. Yes, vacancies are a little bit elevated, but we see the vacancy contraction, particularly in that A-grade space or that the higher end of town. We're not building any new stuff. People are wanting to always occupy that space. And if you had to build one of these properties today, rents would be far in excess of, $1,200 a square metre?
Yep.
And what are they on an effective basis now? It's like $400 or something like that. So there is a very big differential in terms of what the price that can be achieved. So, we are seeing employment growth. We are seeing demand for office space continue to increase. Like every year, we continue to see net absorption in a positive territory, particularly moving away from secondary into those prime markets. So I actually totally agree with you. Like these assets are not going to take long before they're full, and those incentives are going to come back, and rents are going to have to uplift back to a level that would sustain new development. And new development doesn't take 5 minutes to build either.
No.
Like if you wanted to build something new, you go through the planning, you find your pre-commitment, and also cost of construction, which continues to escalate. We don't have enough trades. There's lots of reasons why, but yeah, I'm actually, it might be a bit tough for the next little while, but as a counter-cyclical play, long-term hold, I think an office asset in a lot of places around the country, but in Perth is one of those markets where the cost of construction versus what the rents are achieving today is very, very wide gap.
Yeah. And so I guess in summary, in what you're saying, if it's due to construction costs, it's not feasible to create new supply. Without new supply, this is going to put pressure on existing stock and increase demand and those values.
That's right, and those vacancies will continue to reduce. And if there isn't anywhere else for people to go, that will also have an uplift for the secondary market as well. So we may see some opportunity in high grade, maybe B grade secondary stock.
Being refurbished.
Yep. Upgrade those kind of lobbies, all those sort of things. But look, if we're not building, and we're not, we will continue to see demand increase. That mismatch, will be there, and there will be opportunity. So, buyers out there willing to, take a punt, if you like, to some extent. It's not an immediate response, but on the longer term, and it's not as if these construction prices are going to come backwards.
No.
The cost to do business, builders are very few and far between at the moment. The trades continue to be an issue. So, yeah, I see your point on being a counter-cyclical play, and, there'll be some people there that will do well out of it.
It might not. I guess the demand. We might not see the effects for this for 12 months, 24 months, whatever. But it certainly will happen. And if we have traditionally enjoyed net absorption in the Perth CBD of 10 to 20,000 square metres every year, and with no construction pipeline, there's going to be nowhere for that to go.
And we've already seen that those prime end of the market is where the vacancy has been tightening. So that trend will just continue to occur.
Vanessa Rader, thank you very much for joining us.
Thank you.